What's up YouTube, it's Louis here, I hope you're all well. We're looking at Quant again today. Thank you guys for supporting the channel. I appreciate the patience with the Quant videos. I literally just didn't have time to make one yesterday. I had so many one-on-one mentorship lessons at the moment. The influx is crazy with the amount of students that are joining and joining at the right time in the bear market, which is the perfect time to actually start learning. So I appreciate all the new people joining. Shout out to all the members of the channel. We do have about 3 members on the channel now, been here for 2 months plus. So make sure to get the memberships if you're interested. Of course, there's also the super thanks if you want to give back to the channel. You don't have to whatsoever, but of course the option is there if you just want to. But yeah, carrying on with Quant. Wow guys, we still got higher highs and higher lows. If you remember from yesterday's update, we did actually have the opportunity to go down after creating this reversal wave. The bears had the chance to take power by breaking us back below this, and it looks like we've had this little bounce of support in the meantime. Oh, sorry. So yeah, in the meantime, we've actually bounced off this as support. So that's actually quite positive to see, because this should have never become support. You can see the wicks here rejecting it, meaning that you were in this orange box, but you couldn't stay in it. You kept on rejecting it, meaning that there is some sort of flaw here. There is some sort of support. So now we want to go and break this little high, 112, and then 116 over there. I was saying 115, but yeah, just call it 116. Yeah, equally, if the bullish scenario is not going to happen, you need to close back under this golden pocket, which at the moment it is support. So if you flip it back into resistance, that's extremely negative. You're validating this M pattern over here, flipping this into resistance. The only way this M pattern is validated is if you lose this purple neckline. So I'm going to get rid of all these drawings now, and I'll get you the technical target, which I've already shared on this channel, but I'll bring it to you again. If we close a daily candle below 88, you see we do have a target down here at 67, which would be these previous wicks over here, but we can see the bodies and the neckline of this double bottom down here was in and around $64. So I think that if you were to close at below 88 and fail to reclaim it, so what I mean by fail to reclaim it is if we go under, we can reclaim it, hold it as support, and we'd have to attack this golden pocket again and reclaim that as well and hold it as support to go up. So something like that is allowed to happen still. You could come down and do what I've just drawn. However, another scenario is if you come back down to the neckline and lose it, this is what could happen where we come back to this previous double bottom neckline. If you've been catching up with the Quant videos over the last few days or in the last week, if you haven't, go check out the last Quant video of this week. We were basically explaining how we haven't retested this previous double bottom neckline yet. Once we broke out, we never confirmed it as support. So it's a level that could be seen again in the future if we were to obviously come back down. Because if you do remember correctly, guys, since this weekly candle when we came up to here, I was telling you, as soon as we hit 115, I said, guys, this is the time to actually take some profits from Quant, because we're now at the weekly 55 where previously we made a lower low. So all the bears right here will now say we're going to make a lower low, but eventually that needs to stop, guys. So it's right to believe we actually should see some downside, right? We should actually start retracing downwards back to this previous high over here to confirm it as support. But I think if you do come down here and confirm it as support, you just continue back up and actually penetrate all these EMAs and eventually hold it as support to continue higher. But that's a long way away into the future, isn't it, guys? That's something that we just can't predict, something that we can prepare for, but nothing we can have a bias towards. Right now we're trapped between the 20 and the 55. We need to think about what's going on right now, not what could happen in the future. We need to go off what we're seeing right now. So saying, oh, we're going to make a lower low, or oh, we're going to make a higher high, let's just focus on the signs. Let's just say if we break above this, we know, okay, it should actually continue up. So we know that's why if we're closing above $116, we should expect minimal 130, but all the way up to the 1618 at 150. And remember, we've had this psychological support / resistance now for over a year, or since last year we've had this resistance on the channel. The level which I was able to tell you guys, this is the bear market now. As long as we're below this, we should expect lower lows below $83. And this is when I was getting completely trolled on my YouTube, and I had a lot of those trolls actually putting their hands up and joining, and now actually lovers of the channel, because they were here long enough that they were haters but become lovers and subscribers, and avid subscribers of the channel. So thank you guys for the support. Even if you are a hater currently, You'll come around eventually. And yeah, just stick around long enough to see that. So again, what we do on the channel is we prepare for both scenarios. We don't have a bias. We'll go with what the chart is showing us at the moment. And you can see from this low on the 13th of June at $37, we have made higher highs and higher lows. And I'll show you this, guys. So it was right to say, yep, we're in a downtrend. Everyone knows this. That's why I've been telling you guys since 150, guys, this is now the bear market when we lost 150 and respected its resistance there, creating this ascending triangle. And I told you, be prepared, because if we actually break above this, that's completely bullish. But as long as we're below it, it's not going to happen. And we have to say, and I kept on telling you, unfortunately, guys, I just can't tell you $70. I said those exact words. Unfortunately, I just can't tell you $70 is invalidated. And I had all the people laughing at me, and I was proved right. Because if you did hold and did not take some profits here, and you just thought we were going back to the moon without listening to what I was saying, which is as long as we're below 150, we're not going up. So if we are below 150, and we know if we are going to stay below it, we're not going up, why be 100% in crypto? Literally read into my words or not even, just listen to exactly what I'm saying. You don't even have to read into the words. Nothing to read into other than take it for what's on the tin. It's all on the tin. As long as we're below 150, we're going to go to 70 down here. So did we close above 150? No. Did we invalidate 70? No. So we go to 70. Then we hit 70 and I was like, guys, unfortunately, we're not done, because I used this fib retracement from the low to the high. And you can see, we had a 1618 at 54 with the next one at 41. So these are the targets I kept on giving you. If we lose 41, we're going to 34. No, we didn't hit that, but we didn't close below 41 either. We closed above it at 42. And then when we reclaimed 50, where did you find support? On the $50 psychological level exactly. So pretty much nailed that. And the reason why I kept on telling you guys 50 is it, 50 is it. Oh, FIFA just opened up. The reason why I kept on telling you guys 50 is it is because just like over here, it was a psychological number, and previously key resistance as well as support right there of that wick. I know this wick is higher. I don't really care. You could draw a box from 50 to 55 if you want, but yeah, I like 50 because it's a round psychological number. And since 50, you can see that was the higher low. So just like with my Bitcoin updates, and make sure there's over 600 of you watching this, please go check out my Bitcoin updates. I urge you all. If you're enjoying this video so far, let's try and get this to 200 likes, guys. Please subscribe. We're trying to hit 3.3k as quick as we can. Let's try and get 20 subscribers today. So we're on 320. We were on 315 when we were 3,000. We were on 3,215 when we recorded this. So let's try and push for 3,230 or something like that. But yeah, we've got this low. We have this higher low. And then we've got these higher lows over here. So it would make sense to actually see this M pattern playing out, because we're getting this a bit overextended. We want to see this higher low. I would like to see this retested. So to be honest, I would like to see this come down. But is that going to happen, even though that's what I'd like to see? No. How do you make that happen? You need to lose this low, close below it, as well as that wick. Then we're going to come back down to here. That needs to hold. And if this doesn't hold, you're coming back to the swing low. Because when you make a new swing high, as you did right there, this is the old swing high. So from this push down, from this retracement, you created this monster wave up. It was from this little push down here, you created this monster wave up. Please understand this. So that means it's overextended to the upside. Otherwise, why would we be at the 55 weekly EMAs? Because we're overextended. So many coins are not at the 55 weekly EMA. Let's show you guys. So let's just take away the drawings. You can see the 55. Look, we were way down here at $37 and pumped all the way up to 114. That's absolutely insane. But if we go take a look at H bar, look how low it is compared to the 55. So that is what is going to come for the likes of H bar. That is what's going to come for Ethereum a little bit. But you can see Ethereum's already done some work. Bitcoin hasn't done the work yet. So Bitcoin's got so much space to run into. Quant has done that, guys. That's why I told you, guys, Quant's going to do nothing now. It makes sense for it to actually say it's going to come down. What is not allowing you to come down is the weekly EMAs as well. You're trapped between all of them. You're trapped between the 20 and the 55, but you've got another one below you, the 12 EMA. So you've got two supports and one resistance. So we're just going to do nothing. And I've been proved right, because literally for 1 month now, we have done nothing since coming into this resistance. So I hope even if you weren't listening a month ago, you're starting to see what Louis is saying is starting to come true. So what we can anticipate, because we're overextended to the upside, we're at the 200 daily EMA, and look what happened last time. We went lower than this low. You just want to hold that low, basically the low of that range, around $83. And yeah, that's in and around the neckline of this M pattern as well. And if we can remain above this low, and at the moment we are, because we're even above the golden pocket, something that we should have never done, because remember, this is a push, this is the exhaustion phase before continuation down. That is the scenario where we do come back down to here. That is what should really happen, but you actually broke above the golden pocket. So what needs to now happen is you need to remain above the golden pocket. So we don't want to see Quant closing below 95 if you want to go up to minimal 130 to 150. If you want to see 130 to 150, then you don't want a Quant to close below $95. But if you're closing below $95, we're not going up to there. We're actually going back down to the neckline of this M pattern, where it could get validated, it might not. You could go up again, reclaim the golden pocket, we're going back up. But if you actually lose this, and then you lose this wick down here, then yeah, we're definitely coming back down to this neckline where we want to see that held. And then this would be your new higher low, right? This would be the new swing low, because you just made your swing high. Let's get rid of all these drawings and we'll explain that again. So when we come down to form this higher low over here, potentially over here, this is your swing high, and this would be your swing low to continue up, correct? However, what I want to talk about is when you form a new swing high, you come to the previous one, the previous swing high as a swing low. So this is our low, this is our swing high, then this was our swing low, then this was our swing high. So it makes sense to come back, form this new swing low on the previous swing high. You can see then we're missing that final move up to in and around 150, or maybe even higher to 200 maximum. But I'd be more focused on 150. But you see what I mean? So you've had this, since the low, you've had this pullback, and this is going to be the second one if we are to start coming back down, right? But if you lose this swing high as support, you're allowed to come even deeper, all the way back down to this swing low. So I'm telling you, you're actually allowed to come back to $50 and we're still safe. As long as Quant is above $50. And where are we now? Double that. So we are safe, basically. As long as we're above 50, we're safe. And unfortunately, just like over here, we were going up, right? And I was saying, I can't say 70 is invalidated. We started going down. The people that were on my side, like, yes, Louis was right, we're going to go to 70. Then some of them started flipping back on me because we were going up. Actually, no, Louis is wrong. But even as you were going up here, meaning that if you were in sell positions from the loss here, you would start to lose your profit, right? You'd start to, if you were in a sell position from here, you would have gone loads of gains, back to break even, loads of gains, back to break even. But both times we went at break even, I'd still have to tell you, guys, we're still going to $70 because you haven't invalidated it by reclaiming 150. You have to do this, hold it as support, then $70 is not happening. But if you're not doing exactly that, $70 is still happening. So even though they were in short positions and in loads of profit down here, and you saw Quant go all the way back up, I'd have to still tell them they're going to 70, even though they're losing money or they're losing their profit. And then it still eventually went back into profit. So you see, it's the same thing over here. Even though we could be coming down all the way down to here, and people are going to be losing money, I'd still have to say we're going up. I'd still have to say, as long as we're above $50, we're in an uptrend, because this was your low and this is your higher low. So as long as we're above this higher low here, we are bullish. And that literally means we could come to the higher low. And only once you close below it, then I will say I'm bearish. But the whole way down, I won't be able to say that until you close below it. Because if I'm saying now we're bearish, we're bearish, we're bearish, we're bearish, we're bearish, we're bearish, and then we stay above 50 and we don't lose it, and 50 is confirmed as support, then I will look like the idiot. Do you see what I mean? So I can't tell you we're bearish as long as we're above 50. If we're closing below 50, I'll flip bearish. Thank you, guys.